If you've ever opened your balance sheet and thought, okay, I know this is important, but I have no idea what I'm looking at, you're not alone. I've worked with firms doing 500,000, 700, even 1 million a year. And the balance sheet is the report they either completely ignore or trust blindly, even when it's wrong. And that's dangerous because your balance sheet doesn't just show you how busy you are. It shows whether your firm is financially stable. So today I'm breaking down what a balance sheet actually is, what it should look like for a law firm, and how it quietly impacts cash flow, growth, and even your firm's future value. If your balance sheet feels confusing, intimidating, or even useless, you're in the right place. I'm Chelsea, and I help law firm owners get control of their money so they can stop feeling anxious every time they check their bank account. At Core Solutions Group, we work exclusively with law firms to clean up their books, untangle trust accounting, and build financial systems that make owners feel calm, confident, and in control, instead of reactive and stressed. And I'll be honest with you, the balance sheet is boring. But when the rest of your financials are set up correctly, you only need to look at it for a few seconds each month to know whether something is off. We're going to make this quick and painless. Let's reset expectations. People think the balance sheet is an accountant-only report, but actually, your balance sheet answers 3 questions. What does my firm own? What does it owe? And what is left over right now? It's not a snapshot. It's not activity, not performance. It's position. Every balance sheet has 3 sections. Number 1 is assets. This is what your firm owns. And this includes things like operating cash, trust account balances, accounts receivable, and prepaid expenses. If your balance sheet doesn't clearly separate trust assets from operating assets, your books aren't just messy, they're risky. Section number 2 on the balance sheet is your liabilities, what your firm owes. And this includes things like credit card balances, loan balances, payroll and benefit liabilities, client trust liabilities. And here's where most firms get tripped up. They look at the bank balance and think they're fine, while the balance sheet is quietly showing them money that's already spoken for. That's how firms feel profitable and still feel broke. And the 3rd section is equity, what's actually yours. Equity shows things like prior year profits, owner contributions, or owner draws. And if this section looks negative, confusing, or is constantly swinging, that's not normal growing pains. It's a sign your financial foundation isn't solid. Here's the part nobody talks about. Your balance sheet becomes critical if you plan to sell your firm, bring on a partner, or position the firm for acquisition, especially in the next 3 to 5 years. The balance sheet is what helps establish the true monetary value of your firm. Buyers don't care how hard you worked. They care about clean assets, clear liabilities, and sustainable equity. If your balance sheet is messy, unclear, or unreliable, it can reduce your firm's value, it can delay a sell, or kill a deal entirely. And I've seen that happen. Here's the good news. When your books are done correctly, the balance sheet isn't something you study. It's something you scan. In seconds, you should be able to see, is my cash position healthy? Do my trust balances match my trust liabilities? Is anything drifting out of alignment? That's it. No deep analysis, no spreadsheets, just clarity. So here's the takeaway. Your balance sheet isn't exciting, but it's essential. It protects your cash flow, it supports better decisions, and it plays a major role in your firm's long-term value. If this is helpful, save this video so you can come back to it the next time you review your financials. And next up, we're breaking down part 3, the much more exciting profit and loss statement, and why law firms can show profits on paper while still feeling constant cash pressure. It connects directly to what we covered today, so make sure you watch that next.